All right, welcome ladies and gentlemen. This is going to be a different style of video. I'm not in my typical setup that I'm normally in, but I wanted to get this video out because there's a lot of different changes and stuff going on with business funding. Okay, so I made a video recently about Truist and the changes that they got going on. So I'll link that video in the description if you want to watch that after this one. A lot of other people have talked about Chase, everything they got going on right now. They had an issue, if you don't know, where they have been reporting some business credit cards on the personal side. The people that we work with Chase, they're saying it's like some type of error. I don't really know what the situation is, but hey, that's what they're saying right now. So there's a lot of moving parts going on in banking, and so if you're a business owner and you're trying to fund your business, you probably don't have time to be trying to figure all this stuff out, right? So I want to, in this video, kind of break down what's going on, what banks are really wanting to see from you as a business owner to be able to get funding, and kind of go through that entire process. So really, all these changes that's going on right now, all banks are trying to do is mitigate risk, right? Every time they make changes, every time they switch stuff up, every time they change the criteria, they're just trying to mitigate risk. And so what banks are having going on right now, you got all these people that are talking about, business funding and 0% interest this, 0% interest that, whatever. So you got all these people getting business funding and using it incorrectly, all right? And banks are seeing like these default rates. They're seeing, all these different types of things. So they're kind of getting tired of it. So, that's why you got all these banks making all these different changes. I wouldn't say they're making it harder. It's just the real business owners that have real properly structured businesses and using the funding the right way, those are going to be the business owners that ultimately stand out. Okay, and that's really what all banks want to do, is they want to deal with real business owners. Okay, and so for anybody that's watching this video that has a business and maybe you're a startup, I'm gonna talk to you first, and I'll talk to businesses that are already making money and profitable, things of that nature. But if you're a startup, what you got to understand is the goal has to be to get business funding to get your business off the ground, right? You don't want to be going in here and getting all this business funding and you don't want to have a plan to pay it down, or you don't have a plan to properly use it in the way that it's meant to be used, right? When banks lend you money, when they give you business funding, whether it's a business credit card if you're a startup, they have certain parameters for how they want you to use it. So what does that mean when you say parameters? Well, I'm talking about you using the credit cards, for whatever your business purposes are, whether it's marketing, you're buying equipment, office supply, whatever the need, the use case is. You're using it, but you're not carrying the balance for 8 months. I know a lot of people love the 0% interest. It's very good to utilize on a business side, don't get me wrong, to get your business off the ground, if you're a startup, or if your business already, operating, using that for working capital. So I get it. You want to take advantage of that 0% interest as much as you possibly can. But at the same point in time, banks don't like you carrying a balance for a long period of time. They just don't. It starts to increase your risk level with the bank because they're wondering when you're going to pay them back, right? And again, we know it's 0% interest, so it's something that you're supposed to do, but at the same point in time, you do want to be paying this stuff down as quick as you possibly can. And if you're just making minimum payments all the time, they don't like that, because so many people are defaulting now with business funding. So that's some of the things that they don't like is having high utilization on the business side. A lot of business owners don't even realize that you can't just go out here and maxing out all these business credit cards and, one, think you're going to continue to get business funding, but two, thinking that the banks are okay with that. No, business utilization is a thing as well. You have business credit bureaus like Equifax Business and Experian Business and SBFE, which is the Small Business Financial Exchange. You have all these entities and bureaus on the business side that the lenders use to monitor your business credit as well. Now, your utilization does not have to be as low as it needs to be on a personal side. However, it's still a major issue. You got to be monitoring and paying close attention to that. All right. And so for my businesses that are already operating and things like that, that's who really banks want to deal with. They want to deal with businesses that are actually profitable. Okay. And so again, if you're a startup, you don't have any, financials, doesn't mean you can't get business funding, but you can't expect that you're going to walk into all these different banks and you're going to get 200,000 or 300,000 in funding. Like those days are just not here right now. If you're a startup, it's going to be very hard to do that. Can you get 100,000 in funding? Yes, that's definitely doable. But don't be walking in here thinking you're gonna get 300,000 in business funding right off the rip. Like, it's just not how it's gonna go. And the reason why is because most banks, to get like to those numbers, you got to incorporate other different types of funding. So that's business lines of credit, that's term loans, that's equipment financing, that's SBA funding, like all these different types of real business funding, term loans, like that's real business funding in my opinion. And so to be able to get that, for the most part, banks want financials now. They want tax returns, right? They want to deal with businesses that's been established for 2 or more years, right? So these are some of the things that banks want to see. Also, comparable credit is something that's really, really huge right now. A lot of banks, even if you're just walking in and you're a startup, not having comparable credit is going to limit you. On the equipment financing side of things, you have institutions like U.S. Bank. If you want to just even get equipment financing, they want a year of comparable credit on the business side, right? So it's all these stipulations that they're putting in place. And what does that mean? The real business owners are going to stand out, and the people out here that are faking, or I don't want to say faking, but the people out here that are not doing it with the right intentions, that's who they're trying to push away, right? That's really all these changes that they got going on. That's really all they're doing. So you may ask, okay, LaJuan, well, what can I do? What can I do to be able to either, one, fund my business if you don't have any business funding, two, continue to fund my business, or three, already have funding and maintain my relationships? Because banks are cutting credit limits as well. American Express is very popular for doing that. They've been doing that for a while. That's why you don't really see me making videos about American Express like that, because I'm not a fan of them on the business side like that, to be honest, for that reason. But you got banks like that cutting credit limits. Chase is obviously cutting credit limits. All these banks really have been cutting credit limits, especially if you're running a lot of high usage on the personal or the business side, right? You have things like FICO 10 and FICO 10T that are monitoring your usage for over the last 2 years. So, banks, what they're trying to tell you is they're tired of the games. That's really all they're trying to do. They're trying to mitigate that. All right. So what can you do? Really, if you're a startup, having your business structured the right way. Okay, having a plan built out of banks that are going to make the most sense for you and your use case and whatever your business and your industry are or is. Having a solid plan together. Don't just be hyped up about just having credit card, all these high limits and stuff like that, and you don't really have a plan to use it. I can't tell you how many business owners that we end up talking to that already had maybe business funding, 80,000, 90,000, and they didn't do nothing with it, but max it out on not even business related things, and now they're in trouble, right? So you don't want to be those type of people, right? So you want to have a plan for the business funding if you're a startup, maximizing the funding that you get, even if it's only 50,000 or 80,000, whatever. You want to be able to maximize that to its full potential and put it to work, so that way you can get a return on investment. So then a year from now, 2 years from now, you can go back to these same institutions that you've now built a relationship with and get business lines of credit, get term loans, get equipment financing, get SBA funding, those type of things, right? So that's what you do if you're a startup. And if you are a business and you already, been in business, you got tax returns, financials, that's really where the doors open up a lot, in my opinion. That's just what I'm seeing. You just got so many options on the table for you if you have financials. You just got a lot of meat on the bone with banks in terms of what funding that you can get and what you can get access to. So I hope you guys enjoyed this video. Listen, if you already got a 700 plus credit score, you're tired of the games, you don't got time to be dealing with these banks changing up on you, and you just don't even want to deal with it, you want to just get our help, you can go ahead and click the link in the pinned comment. Hop on a call with us, and you'll be able to talk about your business. We'll see where you're at, see if it makes sense for us to work together in our mentorship program. We'll build you a custom funding strategy, whether you're a startup or if you've been in business for multiple years and you're looking for whatever type of funding, right, guys? One thing I know, people be all on Instagram talking about 0% interest funding. We do everything, right? We do credit cards, term loans, lines of credit, equipment financing, SBA, even some real estate secured deals, like whatever, right? So there's a whole bunch of different types of ways to fund your business. It's not just credit cards, okay? So we do a bunch of different business funding. So again, if you are tired of the nonsense, you want to just get our help, you can go ahead and click the link in the pinned comment. Also, if you don't have the money to invest in that, we have a free group now as well. We'll have the link to that in the pinned comment. You can hop in that group, be able to ask us questions about either getting your credit fixed or getting funding for your business. Either or, you'll be able to find that out and figure that out in our free group and get help with that. Okay, so I hope you guys enjoyed this video. If you want to learn how I got over 500K in business funding by leveraging my omni growth strategy, go ahead and watch the video on the screen right now. It's going to take you to a video I recently did where I break down my 3-step strategy and how I was able to fund my business with over 500K in business funding. So go ahead and click the video on the screen, and I'll see you in that one.